Good morning, ladies and gentlemen. It gives me pleasure to introduce you to Neometals, the normal speed reading test. So Neometals is different. We are an innovative project developer listed on the Australian Stock Exchange. We acquired Mount Marion in 2009. We developed it with a couple of multi-billion-dollar companies to become the world's second largest source of lithium or spodumene production. We conducted a staged sell down. We completed the sale in March 2019. We made about $200 million off of a $3 million investment. Most importantly for us, we've retained offtake, an annual right for 57,000 tonnes of SC6 concentrate life of mine. That's enabled us to deliver about $39 million in dividends to the shareholders. We paid $11 million today. We've also conducted on-market buybacks. Post the dividend, we'll have about $125 million in cash and investments to advance our business. And I'll take you today through the three main operational focuses, which are the lithium-ion battery recycling project, the lithium refinery project, and our Barrambie titanium vanadium deposit. So looking at lithium, some people go, oh, look, you sold out, you're out of lithium. And I'm sort of saying, well, no, we're probably more committed ever to lithium. We just don't need the mine anymore because we've got an offtake option and we've been able to monetize that value and turn it into cash. We're still advancing a number of positions in our lithium ecosystem. One of those has been to advance the engineering studies on the lithium hydroxide project that we plan to put next to just outside of Kalgoorlie. We've been looking at producing synthetic zeolites from the spodumene leach residue, which is a cost reduction technology, lithium titanate, which is a revenue enhancement. It's essentially an anode material. And a number of years ago, since 2016, we've actually been looking at lithium battery recycling and recovering the precious commodities that come out of these batteries. In terms of our strategy is different. So essentially what we're good at doing is identifying the value, building the value, and then we bring in a couple of big hitters to realise that value in the end and share it. So what we're going to do is finish off the battery recycling project, then run the FEED study and the commercialisation activities, advance the design of the lithium refinery and look to optimise that and potentially put in the zeolite production and advance Barrambie. So if we have a look at the lithium battery recycling, it's good Adrian and I agree on many things, and certainly lithium battery recycling is one of them. We have a look at the forecast. There are going to be unbelievable amounts of batteries hitting the market in the coming years. Yes, the market's a little bit soft now, but we have very strong conviction in the long term, the volume. We can see the battery plants being commissioned. We can see the car makers retooling. It's going to happen. And what we're even more confident about is that these batteries wear out. And they are far too valuable just to throw to landfill. We get rocks from Australia, we send them to China, they become chemicals. We get cobalt from the DRC, it becomes chemicals. We get nickel from, Australia and Russia and Asia, and then we sit down and mix them in minute quantities, high purity, to make these batteries, and then it pains us to see people throwing them out. It is a real opportunity. In terms of the lithium market, look, it's in oversupply. We're taking a breather for a couple of years and really positioning ourselves for the next wave, which is 2025. In the value chain, who must recycle? Well, look, from a legislative point of view, if you're in California or certain places on the East Coast in the US, if you produce a lithium, or if you sell a lithium producing asset, you have to take it back, you have to recycle it or fund the recycling. That's soon to come to the EU and every sophisticated country around the world. So, in the production of the batteries, you get 5 to 10% off-spec products that need to be recycled, and at the end of life, you pick up the other 90 to 95%. And why we develop these processes, there's going to have to be lots of small regional ones. You cannot ship the batteries across borders. People don't like them in planes. People don't like them in ships. And the EV, target. So I know the EU's moving to make us recycle 85% of the EVs. And so, burning them up as some of the recyclers do, that use old process flow sheets, just won't cut the mustard in a couple of years. And we do need to have a hydromet solution to recover a lot of the battery. So for us, we've been piloting a 50 tonne a day front-end plant up in Canada. We're now moving on to the solvent extraction, or the hydromet section of that. We'll have a Class 5 cost study out in a couple of weeks. It's materially complete. We will then, following the completion of the pilot, move to the feed study. Essentially, what we are doing is shredding them up, separating the valuables, putting them into solutions and precipitating them out as high purity sulfates. We've got a different model, closed loop. We can take multiple chemistries. We've got a hub and spoke approach for continental solutions for car makers, battery makers, and aggregators. We've got flexible business models, all of this sort of stuff. We're just in it to make a buck, and we can do it via a number of different ways. In terms of the timetable, we've done the pilot plant comminution. We're currently doing the leaching, the purification and precipitation will finish towards the end of July. We'll start the engineering studies, look to make an investment decision in the start of next year. Like I said, we've already bought the front end for the commercial plant, and it'll be just a matter of putting the solvent extraction and leaching on the back end. So the lithium refinery project, like I said, we retained 57,000 tonnes of output. That's a good baseload feedstock for a 10,000 tonne lithium hydroxide. Essentially, we're just trying to mirror what the Ganfeng guys do on the Mount Marion concentrates. It makes a beautiful product. Australia is a little bit more expensive than other places, particularly China, from a capital intensity point of view. So what we're trying to do is we're trying to reduce the costs through the zeolite. We're going to have a look at making it slightly bigger and get a secondary feed to reduce that capital intensity. And for us, it's an option to go downstream when the market needs it. Like, we've got enough money to push this thing now, but the market's not actually going to need us until 2025, 2026. So we're taking a very measured approach to that. There are multiple potential supply options for additional feed. We've secured a fantastic 100-acre site 5 kilometres from Kalgoorlie, which is Australia's gold mining capital. Unbelievable infrastructure. We've got government roads, government rail, gas pipeline, water, and a very friendly community nearby. Arguably, our biggest asset is the Barrambie titanium vanadium project. It's located between Sandstone and Meekatharra. It's the world's second highest grade hard rock deposit, one of the most advanced projects globally. We're just finalising the DFS on the vanadium only. What we're going to be doing now is moving into the best way to recover the titanium. We've been conducting for the last year a pilot plant up in Chengdu at IMUMR to produce titanium slags. So that'll close off the pyrometallurgy route, and then we'll then look at a pilot hydromet to produce a titanium chemical. And look, vanadium, the prices have been up, the prices have been down. What we see is that primary production or global production has been reducing annually for the last 7 or 8 years. There is a deficit emerging, and we're very confident that primary supply will certainly be needed, probably on a similar timeline to the lithium refinery, sort of 2024, 2025. That gives us time to optimise the titanium recovery. Essentially, in the 280 million tonnes of ore, we've got $100 billion worth of material down to 90 metres. 29% of that is the vanadium, the rest is titanium. So we've cracked the vanadium nut, and it's going to take us probably another 12 to 18 months to crack the titanium nut. And likewise, the titanium, as it is the bulk mineral in there, fortunately, we're going to be in structural deficit from about 2022 onwards. So that'll work out well for us. So I think, what do we offer the shareholders? One, security. Management's the biggest shareholder in the company. We've got a strong balance sheet. We've actually got our market cap backed by cash. Great board and management team. We've de-risked developments. We've got a history of doing that. We've got disciplined capital allocation and returning funds to the shareholders. And we've got fantastic opportunities in lithium, vanadium and titanium. So I'd encourage you to have a look at Neometals. Thank you.